need to make sure we keep ourselves accountable. It's really important. I'm gonna keep everything really, really real with you guys, just because I feel like a lot of times we're able to get away with a lot of our own excuses, you know? And so I want to make sure I keep it real with you guys, that we're able to eliminate bad habits, that we're able to just take this as serious as it can be. And so today I've been tasked with covering risk management, a little bit of trading plan. I'm going to go over expectations too. And so for this to make sense, for those of you that don't know me, I've been in the game for almost 10 years now. So the good thing about that is I've been able to see hundreds of thousands of traders' problems, maybe more. We've been able to go through a lot of different mindsets. So I've been able to communicate and kind of walk people through shifting the way they look at the world, they look at themselves, how they approach the markets, how you understand money in itself, and what you feel like you're owed in this game. And so the beauty of listening and seeing a lot of the mistakes in this game is that I've been able to figure out a lot of things for you guys specifically. And so what I want to talk about today is going to be how you can approach this so you last. Because before you start looking to be profitable in the game, oh, you got a couple other things you got to take care of first. And the first and foremost, you got to survive the game. It's like before you decide I'm gonna win a fight, well, can you even take a punch? So that's what we're gonna talk about a little bit first. You're gonna learn how to get punched in the face by the markets today, and it's good because it's inevitable, right? And I like comparing trading to a boxing match or MMA or something, because there are certain things that are just true. And in this game, in the trading game, you are going to lose. You are going to also lose money. But you have to be willing to lose. You have to be willing to lose money in order to make money, right? You just cannot skip these things. You can't avoid them. So this game is not about avoiding risk. It's about managing risk. This is really, really important, because you're going to find yourself looking to avoid losing or avoid hitting stop loss. You cannot. You have to surrender to these things. And the faster that you're okay with that, the easier it is to be successful doing this. And so when you see this all the time, and also I want you to know it's normal. It's more than okay to feel like it's kind of hard to lose. The ego, the pride takes a hit, because it's like, I don't want to look like I got this wrong. Like how many times have you guys shared a chart and then it just doesn't go your way? And then now you're like, dude, I sent this in the chat. People are going to think I suck. Yeah, here's the coolest thing. This might make you feel better. I guarantee I've publicly taken more losses than all of you combined. Just to put it that way. So if you think about it, I've been a worse trader and I've lost way more than everyone here. So does it really matter? Like y'all still got love for me. So if I've taken more losses publicly, then whatever losses you're taking, it's probably not really a big deal. It happens all the time. And I lived it in March. March, I was like, man, squad's not feeling too good. Like I'm gonna definitely lose some followers on this month. But my attitude is so different compared to most people. And one, obviously, like you living through it, having experience makes a massive difference. And so the goal is really to position yourself in the beginning to live through the experiences you have to gain. Because as a trader, you cannot skip levels. There's not one lesson that you can skip. You will endure the lesson at some point or another. That's why some people, they make money early on. We call it beginner's luck, but eventually they will meet the lesson they're going to learn. And how painful that experience is all based on how you're managing your risk. It's all based on how you're managing your expectations. And these are the type of calls, these are the type of trainings that most people exit. These are the ones that people don't show up for because everyone wants to see the charts. Because here's the coolest thing and the most interesting thing about trading is that looking at charts is easier and we spend more time doing it because it has nothing to do with you. When you're analyzing and you're looking at the charts, you're looking at what's going on in the world, what's going on with these currencies or these cryptos or these indices or these metals. Cool. But what does society struggle with? Looking inside, looking in the mirror. It's like accepting your own deficiencies, your own mistakes, owning up to the mistakes that you make and realizing, man, I'm actually kind of gritty, or I really think I'm better than I actually am, or I just haven't done some of this work. I have limiting beliefs. I mean, maybe I'm thinking small. I have scarcity mindset. This is what we don't want to do. And so I almost can guarantee if everybody here spent, if you flip the time you spend on the charts with the time you spend kind of understanding why you do the things that you do and why you feel the way that you feel, the everything changes. Your results would drastically change. That's why I always encourage like guys, like plug in on Sundays, the psychology sessions, go through the trading beyond the matrix sessions, go through like I have like at least 150, maybe 200 psychology sessions on my Go Live. And there's a handful of people that I know for sure that have gone through most of those. And every single one of those people, they're doing pretty well. Or at least they're still here. Because step number one is survive. If you can survive, that's really the main part of the game in the beginning. How long can you endure? Because, and I want you to understand this, guys, this is not something that ends. Like trading is an infinite game. This isn't like cool, after 4 quarters, it's over. After 90 minutes, it's over. After 9 innings, it's over. After 12 rounds, it's over. It's unlimited rounds here. And so this requires the highest standards because it also provides the highest standard of living. But we got to live up to those standards. And so that's the journey that we're in right now. So I'm going to give you guys a framework so that you have just, these are basic, simple things. But again, and you've heard of this before, what's easy to do is also easy not to do. So let's dive into it. I'm going to give you guys a couple of things just to structure your risk, understand the laws of risk and reward and probabilities. And the key thing is this. Well, after I go through, I'm going to go through, you just have to surrender to these ideas. That's it. If you can just surrender, and this is a key word, I'm using this word intentionally. Surrender means like, okay, you win. But it's giving up to go up. All right, so let's dive into this. Now, there's a couple of things that we're going to look at here. And so if you're taking notes or if you want to, now is a good time to do so. So the principles of a successful trading plan has to do with a couple key things. Number one, you need to have an edge. All right, an edge, EDGE. Now, how do you build an edge? Your edge is something that gives you an advantage. For some people, it's going to be their technical analysis. You may have a certain type of outlook at the market that gives you a great risk reward ratio, or maybe you have a way in which you look at the market where you win pretty often. Right? For some of you, your edge might be that you're extremely disciplined. And because of your discipline, you're able to make the right decisions and ultimately make money. But you want to build an edge, right? I believe that every educator on the platform has an edge because without it, you would be getting smoked by the market. But everyone's edge looks a little different. So one of the truths in this game is that you can win by doing a lot of different things, but you have to do your thing really well. So for example, the way I trade is not the way that another educator trades. Doesn't make them better or worse. It's just that I got good at doing what makes sense to me. They got good at doing what makes sense to them. So the first thing that we're going to look at here is the power of, or the reality of, a 1-to-1 risk reward ratio. So when you see RRR, risk reward ratio, a way in which you can look at the market and your own results in a healthy way is looking at it in R, like based off of R. So based off of risk or reward. So +1R or -1R. And the reason this is useful is because you're not judging yourself based off of how much money you're making or losing. You're not judging yourself based off of percentages. You're basically just looking at, okay, well, how well am I just performing my plan? So if you are trading and your exit is, if you make what you risk, that's a 1-to-1. So out of 10 trades, and you can see this on the right side of the screen, out of 10 trades, if you win 5 and you lose 5, you're at 0, right? It's a wash. So what are the pros and cons, right? You have a pretty decent win rate. This is what you need, but it's a low profitability. So as you can see here, if you take a buy position, then what you risk, which is the red, and what you make is the blue. Vice versa. If you take a short, if you take a sell, the red is a loss and the blue is a win. Now, what are the perks? What are the pros of doing a 1-to-1? Well, the market doesn't really have to travel too much, right? The market just has to go in your direction for a little bit, just as much as you risk, and you're good, and you make your money. So you're probably in the market for less amount of time. You're probably winning more often. But the downside to this is that you need to win more than half of the time to be profitable. So strategies that work well with this are strategies that you feel like you go into profit pretty frequently. So if you feel like whatever your entry strategy puts you into profit relatively frequently, then you can experiment with the 1-to-1 ratio, right? So this works really well. For example, someone who I think has a totally different approach than I do is like Lizaldo, like Lou. Lou, I remember he trades teacup patterns. And so he actually risks, I think he risks 30 pips to make 20. I think that's how he would do it. So it's actually less than a 1 risk reward, risking 30 pips to make only 20. But he wins a lot. Like I think his win rate is like 75 or like 80% or something. So he wins pretty frequently. So because he wins a lot, then in this example, it makes sense for him. Pretty good. Now, if I know that my strategy, I'm not winning that much, then that wouldn't really make sense for me. So that's when we're going to go to the next idea, which is a 1-to-2. Now, this I think is what I would say works for a majority of people. I think a majority of people would position themselves in the right place with this type of risk reward ratio, especially because you don't even need to win half the time. As you can see here, you're profitable if you're winning just over 34% of the time. So if you're winning, let's say 7 out of 20 trades, you're profitable. So take a look at this right here on the right side of the screen. This is how you can see it. First trade, you win +2. All right, +2R, which means +2 reward. Trade number 2, you win again. Now you're up 4. Third trade, you lose. All right, now you're up 3. Fourth trade, you win. Now you're up 5. And then you take back-to-back losses. Now you're up 3. Then you win again. Now you're up 5. Okay, and as you can see, right, 10 trades in, you're up 5%. So if you went 50-50, you're up 5%, assuming you risk 1% each trade. That's great, guys. That's fantastic. So the beauty with this type is this, is one, you don't have to win as often, but the market does need to travel in your direction. So I think this is great because, especially like, for example, if you trade with a similar approach than I take, then you guys have noticed this all the time. When our entries are great, it reverses off of our zone really well. It's like a springboard. It just you can see the shift in money. You guys have seen it. Sometimes there's trades that look like they're just falling off a cliff, As soon as it gets into our zones, it's like just reverses right off of the area. That's why it looks way cooler than it really is. You're like, how did he just move the market? But it's not because of anything we were doing. It's because we're learning, and you guys are seeing where does the big money get in and out of the market. That's the only reason that happens. So better risk to reward ratios are in our favor because of our strategy, right? The way I'm getting in is completely based on big money also getting in. So if a lot of money is going to get into the market, then it should move the market a pretty healthy amount. So we can afford to lose a little bit more frequently because we get paid out a bit more, right? 1 to 2. This is great. Now, eventually, and I want to add on to this right now, I think having this 2 risk reward as a fixed risk reward, if you're in your first 6 months, I think this is a great idea. Because you also want to learn how to build like confidence in the fact that you can actually do this again and again and again and again and again. That's the key thing, because it doesn't matter how well you understand the charts. What matters is how well can you actually do what you told yourself. Because to know, right, to know and not do is to not know at all. And this is what Bob Proctor calls the knowing doing gap. So it actually, you can have the greatest plan in the world, but if you can't follow it, then it doesn't, none of that matters. So at least having a fixed exit where you're looking at, okay, I'm making twice as much as I risk, and I'm going to do that until this is now something that I'm very good at doing. It builds confidence in your skills. And also, once you've done that for long enough, then what can you do? You can go and review your trades. So this is how you start to make evidence-based growth. Where imagine, guys, so think about this, right? Imagine the next 3 months you've taken just 1 to 2 trades, right? 1 to 2 risk reward trades. And now you have 3 months worth of trades. So what do? You go and you look at all the trades that you took and you study them. And you then think to yourself, okay, well, what if I would have taken all of these trades, but instead of taking them to a 2 risk reward, what if I would have taken them to a 2.25 risk reward, 2.5 risk reward, maybe a 3 risk reward? So let's say you have a theory, like, you know what? I feel like most of my trades go actually further than a 2 risk reward. So what if I would have taken this to a 2.5? And then you go through all of the trades that you took and then just assume that you would have taken it a little bit further. After going through all of that, then you'll see, okay, well, with a 2 risk reward, I made 10% over 3 months. But if I would have done 2.5 these last 3 months, I actually would have been at like 13%. Maybe I can improve my risk reward. Maybe I can let my trades ride. Maybe I can let them run a little further. But that's how you want to continue to expand your risk to reward, not based off of just like, oh, maybe let me just experiment. Let me just change my whole strategy. No, you want to have proof behind it. And what's the best way is you go look at everything that you've done. So let's look at a couple different risk reward ratios. So look at a 1 to 4. Now, a 1 to 4 risk reward, this requires a bit more work. This I would say is a bit more advanced. There are certain scenarios in which this makes a lot of sense, and there's certain scenarios in which it may not. But a 1 to 4 is great because you don't need to win that often. So imagine here, as you guys can see, if you take 10 trades and you win half at a 4 risk reward, 15% is nice. That's hefty. That's good work. But you don't even need that. Imagine you win 3 trades out of 10. Just 3. You're still profitable. Guys, if you were to win 2 trades out of 10, think about that, just 2, you'd still be at break even. 2 trades. That's it. So this is nice, but here's the thing that you have to keep in mind, all right? This is the thing that people don't think about. They go, oh, cool. That means I don't even need to win that often. But if when I do win, then I'm winning big. But here's the one thing that nobody talks about. Can you endure losing that much? Drop a 9 in the chat if you struggle with seeing stop losses in your trading account. And just be real. You lose and you're like, I don't know if this is for me, man. You lose again, and then you lose again, and then you lose again. Right? It's normal. It's heartbreaking. And you'll get better at it. Eventually, you lose so much you feel nothing. And then you'll have no feelings anymore. It's like me. But all jokes aside, taking losses is what usually creates deviation from the plan. All right. So more frequently, you might not have enough thick skin to actually lose that frequently. And so you may have, in theory, you may have trades that are profitable, but the problem is that people with a wider, like a longer risk reward, they have a harder time following their plan because they're losing more often. It doesn't mean that they're not profitable. They probably would be very profitable. The problem is after losing, 6 or 7 trades out of 10, all of a sudden you start to doubt yourself. You start to hesitate. You're not executing the trades that you should be taking. Because it's not just taking a trade that you shouldn't be taking. That's a mistake. But it's also not taking the trade that you should be taking. That's a big mistake as well. And so the downside of 1 to 4 or 1 to 5 risk rewards is that after enough losses, it can get to your head. It can mess with your mental. And if you let that happen, that's a big one. Numb trading is the way. No, it's not. It's actually just as dangerous. And not using stop loss is my biggest problem. Man, been there, bro. Been there. So it's very nice to have great risk reward ratios, and it looks really good on a chart, and it looks nice on social media. But I will add, there's very few people. It takes very disciplined traders to endure the losses or the break evens, because sometimes it's not even losing. Sometimes it's like just going break even, small stop profits. It's up 3 to 1, and then it just turns around and gets you out. And I'm at a point now where after almost, almost a decade in the game, I'm okay with seeing a trade go 3 to 1 and then it comes back out to stop me out for a 1 to 1. Why? Because I was going for a 9 to 1. But mentally, it's easier for me to endure that because I've seen 10 to 1s hit for myself. I've seen some big trades hit and it makes up for it. But if I don't know if I can, I don't know if I can stay disciplined if I'm losing more frequently or if I'm going break even that frequently. You can build up to these moments. So don't allow like social media or like these crazy things. Don't even trip about that. Grow into the bigger risk rewards, and a bigger risk reward does not mean you're going to be more profitable. Right? Let your trades give you the information. Now, someone asked, would you recommend taking small profits for small accounts like $200 or just let it grow? It doesn't matter how much money is in your account. What matters is, can you follow the plan you gave yourself? Like, okay, so I'm glad you asked that because this is important. Thoughts on 1 to 10? If you don't have proof that that's going to work, then what's the point of it? So like, could 1 to 10 work and risking 3%? Okay, so I'm going to tackle these two things on. First, I'm going to tackle on the question, which is, would you recommend taking small profits for small accounts like $200 or just let it grow? So you need to do the same thing over and over and over and over again. And that's what matters the most. Can you do the right thing, your plan, consistently over time? If you can do that, then that's what matters. If you have a small account, let's say you have $200 in that account right now, or whatever, you shouldn't just have a trading plan, you should have an investing plan. Like, that account should be getting funded weekly or however often you're getting paid if you believe in your skill. if you believe that what you're doing is responsible, if you believe that you can manage your risk responsibly, then continue to fund it. If you don't trust yourself yet, then don't fund it. Start small, play around. Demo account first. If you feel like, okay, you know what, I've played around with demo. I think my strategy looks like it's working well. I understand risk management. I understand risk reward. Then eventually, guys, you do have to graduate into a live account and feel the reality of having money on the line. You have to feel it. Like by nature and through history, women are very conservative and they take longer to go to live environments, and they're a lot more cautious, which saves them money. But on the other side, women tend to grow their accounts slower because they're more cautious. But usually, you don't blow accounts. And I can speak from working with hundreds of thousands of women in the space over years. It's not just talking for the sake of it. Men, on the other hand, one, testosterone and ego and pride. It is what it is. So default, gonna blow way more accounts. Just it's like we're just, we're just like jumping off that plane, no parachute. Like, let's send it. So just be aware of that. You have nothing to prove in this, okay? Look, my fellow my fellow brothers, you're gonna eat it. You're also gonna make mistakes. So it's okay to be a demo. Like, start there. Once you, because look, here's the thing, where we get overconfident. And it's just, it is what it is. But with the confidence, the way you deliver confidence here is different. And again, now this goes to everybody. Confidence comes from being able to lose and understand that your time is coming. It doesn't mean it's about winning all the time. This is not that kind of game. This is not your standardized test. This is not, SATs or ACTs or whatever. This is not like, the flex is being able to lose disciplined. It's not about making one big win and then cool, you don't hear about another win for another 4 years. Y'all know how many traders I saw make a big trade in 2018, 2017, 2016 that I have not heard from those people? You know how many people I saw have a big win in 2020, 2021 that are now made a massive flex that are now nowhere to be found? So this is a game where you're here for a long time. You're here to be consistent. You're here to stay in the game, to keep playing the game, not to just, one big win and then now you're looking to live up to that, because it doesn't build the right habits. And that's the way you need to think about this. Like, you're protecting your habits at all times. You're protecting the way you see the world and you see your trading. If it's not building the right habits, it's not worth doing. Period. I'm gonna say it again. If it's not building the right habits as a trader, as an investor, it's just not worth doing. And it's easy to start to kind of like bring toxicity, especially in a comparison culture, in a social trading setting. Guys, if your chats are all about reinforcing positive behavior, you have a good trading chat. All right. If everyone's looking to size up on each other and like, oh, I made more, like, nah, you got to reshift the way that works. Like, I want everyone to win and I want you to celebrate each other, but it's not a competition because everyone's on a different timeline at all times. So to go back to the question in regards of going from demo to a small live account and then building it up, if you're at a point where now you have a small amount of money in there, treat it properly. Treat it like, let's say you have 200 in there. You have to visualize that has a couple more zeros next to it and trade it like that. Because the beautiful part about trading a live account is you're going to go through all the lot sizes. Like, if you're funding it as you're getting paid, which is what I would do, which is what I did, then that 200 next week will be 250 or 300. Week after that, it'll be 350, 400. And so it'll keep growing. And then if you're risking, let's just say 1% with that account, maybe less, maybe more, depends on you. then all of a sudden you go from 0.01s to 0.02s to 0.03s to 0.05s to eventually, maybe your account's sitting at a couple $1,000 and you're able to throw a 0.10 in there. But you've earned the right to do those things because you're nurturing. It's like it's a savings account, but you have control over the interest. That's all it is. So, but if you don't have confidence in your risk management, if you don't have confidence in your discipline, then what you're gonna do is you're gonna pay the price probably at some point, and you just gotta accept it. And there's not gonna be a perfect process. You may think that you're ready and you're gonna fund it, and then you're gonna trade okay, and then you're gonna get overconfident, and you might blow it. Or the other side, and you're under risking. Believe it or not, guys, believe it or not, some people under risk in the game. Trust me, I know it sounds crazy, but there's people that are like trading the absolute smallest amount. But guys, under risking also is breaking your trading plan because now you have inconsistent outcomes. Because here's what happens, and you guys can let me know if you've done this before. You risk 1% and you lose. You risk 1%, you lose. You risk 1% and you lose. Now you got a little bit of fear. Now you're not so sure. Then you risk 0.5%. Guess what? Oh yeah, that's the one that you won. But instead of winning 3%, you only won 1.5%. So instead of making back everything that you should have made back, you actually are cutting your progress in half. All because you lost faith, and you don't even need faith, it's just a plan. So what I'll tell you is this, is surrender to the randomness of the outcomes. Like, guys, when you hit TP, when you hit stop loss is never going to be exactly when you think. There's been trades where I'm just like, I could throw the whole account at this trade. There's been trades where I'm like, this is such a signature setup. Like, I could throw the whole thing on this thing. It almost feels like it's for sure. And then I hit stop loss in like 15 seconds. And I'm just like, thank God for risk management. Because look, guys, it doesn't matter how you feel. You have no control over what happens next. All it is we apply our skills to randomness, right? Skilled randomness. That's all we're doing. Over time, we have an edge and things can go well. So someone says, what makes trading numb just as bad? Oh, let me tell you. What happens is when you're numb to the outcomes is that none of thing matters. It's like it's the same process as when you're gambling. A gambler, they start to feel nothing. You lose, you lose, you lose, and you almost expect to lose. So then now you actually are out of touch with reality. And this is where it's like things can get actually really bad. Because remember, guys, your emotions, this is not a battle against your emotions. This is learning how to work with them. Your emotions are they're a tool. As a trader, they're your tool. It's what allows you to know, like, okay, hold on. It's this, like, your emotions as a trader, they're giving you alerts, they're giving you signals, they're your indicators, exactly. Right? They're telling you, hey, you are frustrated. You are greedy right now. But the difference is this, guys, is we were not taught how to decipher the signals that our emotions give us. We just weren't taught these things. I mean, it's not your fault. So you learn. And this is what I teach you in the Trading Beyond the Matrix sessions. Like, you learn, like, oh, I can feel these things, but I don't necessarily need to act on them at all. So when, for example, if you're numb to the emotions, that means now you're not getting the warning signs either. So it's learning it's like you have to communicate with them. I heard something a while back, and it's a lot of people just listen to themselves. You have to communicate with yourself, because there are certain thoughts and certain emotions that we're gonna hear or feel, but those may not be truth by default. These things come from our subconscious. So if we've never been taught how to process emotions, or if the way you've been taught how to process certain emotions does not serve you, then you're only going to do yourself harm. So that's why it's like, wait, hold up. Let's say I missed the trade that was a winner. So now I'm feeling like, all right, no, hold on. Let me go make that back. Let me go make that back. Well, you got to have that conversation with yourself. Wait, why am I looking to rush this right now? Why do I need to make money today? Why do I need to get that? Why do I need to win and make up for that loss right now? Why? Because I can't handle a little bit of rejections. So the key thing is this, right? What makes you an alpha, if you will, what makes you a strong person is not avoiding the thoughts or the feelings or nothing like that. It's actually confronting them and understanding them. Because it's like, who has the power then? Your emotions, your thoughts, or your willpower? You. And these are key. These are essential as you develop your trading plan and as you manage your risk and everything like that. So my suggestion would be treat an account, regardless of the size, as if that was your, like your professional trading account. And if you treat it like that and you fund it like that, then eventually it will be. And you're able to go through the motions. Now, for the question about 1 to 10 risk reward ratio, it could work for sure. But again, how frequently is that trade going to hit for you? Like, do you have the numbers that will show you, like, hey, you're going to win 2 or 3, let's say 2 out of 10 trades? If you're winning 2 out of 10 trades at a 1 to 10, you're profitable, super profitable. But can you endure losing maybe 7, 8 trades in a row, or just not winning anything? Can you do it? And then the question about risking 3%, you tell me, if you go and lose 3 or 4 trades in a row and now you've lost 10% of your account, is that going to get in the way of following your system? If it won't, live your life. But in my experience, I don't know a lot of people that can just see 10, 20% of their account disappear in a week and just be fine. So it depends on the tolerance. Someone said the account should be continuously funded weekly or monthly. Depends on you. Depends on your financial situation. It depends on, do you need that money by a certain amount of time? Is this something that you're putting directly aside and you have no need for it in any near future, or ever again? Because you have to be just okay with never seeing this money. Because at the end of the day, guys, the more detached you are from this money, the better you can actually execute the entire system. All right, cool. Let's see here. I'm reading through the chat. My account has only 2 or 3% left to risk. Is it okay if I risk less than the usual to get the hot count back a little bit more higher? I mean, yeah, I guess so. You just have to be okay with it taking longer to get back. I would say usually no. If it's your own account, then just keep trading what you've been trading. But in your case, it sounds like it's like a funded account. It's up to you, man. It'll probably just take longer, and then you just stay consistent to that, or you just keep doing what you've been doing and you pay the price. Problem is, I see $7 profit, but I keep holding to hit TP, then all over it suddenly turns red. Okay. What options do you consider when you withdraw? Personally, what is your thought process after, and what do you prefer personally to do with your winnings? I'm an investor, so like if I withdraw, it's usually going to go into an asset. So whenever I withdraw, it's like, okay, cool. Let me throw this into crypto. Let me throw this into. Actually, that's exactly what I did. All of the withdrawals for this year have gone straight into crypto. So that's just me. The end of the day, guys, what you need to know is like, where are you in your journey? Are you in an asset accumulation? Are you wiping out debt? Are you? It just depends on you. So that's what matters the most. It's like you just want to basically, like, one of my favorite sayings that I've heard probably in like my life was actually one that Nan said, which is like only out of profit, never out of pocket. So everything, like I'm saying, like the ring I got her was all out of profits. The wedding that's being planned is going to be only out of profits. Like all these things like that is just how you stay growing, you know? So that's how I do it. I don't really, or you're investing into things that work for you, like in your health, you know, you're investing in whether it's just good healthy supplements or, you know, vitamins or whatever you need, investing, let's say, for example, like investing in this microphone, right? This microphone here, this came through investments, came through profits. So, and then what happens? This here ultimately creates more profit, creates an income. So, at least that's just how I think. So just want to trade and throw it into investment week by week. And you can do that too, guys. You can know, you have to know yourself. Like you might be in a phase where it's like, okay, right now for this month, I'm so slammed at work. There's just no way I'm going to be trading. Cool. Use your money and put it to invest into something that's more hands off. Now it's like you're still investing, you're still growing your net worth. It just might not be through trading in that moment. Like that's the beauty about listening to yourself, understanding where you're at for this week or for this month, and then making decisions based on your scheduling, making decisions based on where you're at. So like as a trader, guys, your goal isn't just to create cash flow and to withdraw from the market. Your goal ultimately is to have a positive net worth and keep scaling that net worth. That's what ultimately matters. So remember, just because you're trading doesn't mean that you're going to be good financially either. I've definitely seen a lot of people make this mistake 100% of the time. Do you invest or trade stocks? What's the risk management with that? It's not too different, right? I love the idea of stocks. I think it's so cool to have ownership in a company, but I just can't. I can't give money to the stock market knowing what I know about the crypto market. So it's like in a world where crypto didn't exist, I'd be in the stocks game like crazy. But it's just we're in the game a little bit later on, and the returns are just a lot different. And I'm okay with the drawdown that comes with crypto as well. Like my portfolio dropped like 50% probably over the last like 2 or 3 weeks. Okay, like I'm just aware and I'm ready for that. I'm just so if it was stocks out, my portfolio would probably be seeing very little drawdown, but it also wouldn't be growing at the same rate. Been on a challenge since October 2023. I've been consistently trading 2 to 3 trades weekly right now. The risk I use is 0.75% risk per trade and currently sitting at negative 3% of account. What advice would you tell me for adjustments in my trading plan so I can continue grow percentage? Nothing, bro. Keep trading. Keep trading and just take all the trades. If you feel like you lose 3 or 4 trades in a row and then now you're deviating from your plan, then maybe drop your risk. But Drew, bro, I know you, so like you're good, bro. Just keep doing it. Just don't get in your head. Next few months is crucial if you have a portfolio. Would you agree? Yes. How did you get better at trade management, trading stop losses without thinking that you're missing out on opportunities when you get stopped at a break even? It's back testing. Like go look at everything you've done. Look at all the trades that you've journaled, all the trades that you've documented, and then see what. So like if you have a plan on how you manage your trade, so go through all those trades and go, does this work? So like your history, guys, your history gives you the insight to your future because you're evaluating all the experience, all the things that you've done. This will give you the insight of like, oh, you know what? I should keep doing this because it works well. It protects my money or it makes me more money. Or you look at all your trades and you see, oh man, my stop loss management is getting in the way. I need to do this a little differently because I'm getting wicked out, break even, or I'm getting wicked out at a small loss, and then these trades are running. So maybe I need to make some modifications so that these things can work. Here's the thing: it's just people just don't want to do that. People don't want to document their trades. People don't want to go look back. It's like you learned. I used to give this example all the time, but imagine you learned how to play basketball, how to shoot a ball, how to shoot a basketball from your grandma who never played basketball in her life. And so she taught you how to shoot a ball. And then you just practiced 8 hours a day for 10 years, but you practice the wrong way the whole time. So it doesn't matter how much time you put in because you've been just doing the wrong thing the whole time. So you do want to evaluate what you're doing. Do you still make mistakes even though you've been in the game a while? 100%. Definitely. I made a mistake a couple days ago and I'm like a bit salty. It's just they don't usually like the mistakes aren't as you don't pay that big of a price percentage wise. And you get better. And with time too, all that happens is that I think you feel it a little differently. But for sure, guys, like I make mistakes, like I literally Monday I made a mistake and it cost me a bit more than it should have. But the thing is just eliminate as many mistakes as possible and gauge yourself based off of this one. I got 2 more minutes, guys. How do you use Forex to accumulate assets? I think Forex can be funding, can be the funding account to build a portfolio. That's an investor. That's what I'm trying to do. It really is based on what you want, what you think your strength is, and also about market timing. So, for example, I think right now using profits from trading to build the portfolio is very smart. The market is very hot, like crypto markets, and I think there's a way bigger return over there. So, moving some money over and riding the right cycles makes sense. Or taking up some profits from your trading account and investing in something you have an edge in. So, for example, let's say your family has a lot of experience in a specific type of business, and like you naturally have an edge with these businesses because of experience or connections, then use that to build an asset for yourself or to build income for yourself. That's what I would be doing. What advice would you give to new traders who are exposed to so many different strategies and how to go about navigating that? Stick to one because a lot of the strategies are they may go against each other. So like, for example, the trade that I'm waiting for might be the exact opposite of what AWOL is doing. AWOL might be selling and I might be buying and AWOL might be my exit liquidity and it's okay. So sometimes he wins, sometimes I'll win and we're going completely against each other. But that's the thing is like no one's right or wrong. But if you are learning, like you're gonna have to just surrender to that strategy because if you start to combine them, sometimes they're completely the opposite of each other and you're going to end up way more lost. And so go with what naturally clicks a bit more. How long did it take you to actually take a real trade when you first started? It took me about, I think, 30 minutes. Yeah, I literally learned about trading and funded it and then lost money like instantly. It was awesome. I had no chill. It was just straight to trading real money just because I was super eager and I was 20 years old in college and way too much pre-workout in my body probably and Red Bull. Yeah, it's just what I do. I just throw myself into the pit of fire. Let's see, BTC halving. How are you feeling about it? Great. All right, cool. Yeah. All right, guys. So we'll keep it at that. Thank you for the time. Appreciate